today we're gonna break down what a certificate of eligibility looks like, the information that is on there, and what you need to know from this document that grants you the VA home loan. Now, in a prior video, we did a whole piece on, and I'm gonna link it down below, the eligibility component to getting the VA loan, right? So you've done that, you're eligible, you have your certificate of eligibility. What does all of that mean? So without further ado, let's break that down. So I'm gonna first go over two types of certificate of eligibilities. I'm gonna go over a regular one that doesn't have VA disability compensation and another one that does. And I'm gonna break down what these terms mean. So here you're gonna have your, actually, you know what? I need to turn my cursor on so you guys can actually see what I'm talking about. Okay, so you're gonna see the reference number on here. That's just a reference number that you're getting from the VA to just for whatever code you're gonna have. But when you call in and if you have questions on it, you're gonna just give them your social. Your entitlement code 10, like on here, it says entitlement code 10. Now, what that means is basically it's a veteran that's from the Persian Gulf to current. Now, the most common entitlement codes are 5, 10, and 11. So 5 is going to be typically indicate that you've used the VA home loan before and you've restored your benefits. Entitlement 10, like we mentioned, that's basically if you're in the last 20 to 30 years, you're going to be entitlement 10 or on. So basically, anyone enlisted before or after 1990 is going to have entitlement code. And then entitlement code 11 is if you've served in the reserve, then you're going to have that component to it. The other one is going to branch of service, obviously what branch you were in. And then also, by the way, if you change your name and you need to make some update, you got to reach out to the VA. I'm also link that down below. And then here it's going to distinctively tell you that you are not exempt from the VA funding fee, which I'm also going to break down today. If you've used the VA loan before, you have some prior loans charged to your entitlement. This is where they're going to be, right? They're going to have your loan number, the state, the loan amount, how much was charged, and I'm going to break that down in a little bit, like how does that factor in and what the VA rules are, because they've definitely evolved and changed over time. You guys need to understand it, and especially if you've sold a property and you didn't request your certificate of eligibility, that property may still be on there. That's why, again, it's relevant. Next part is going to be the veteran's basic entitlement of $36,000. Don't worry, that's not the limit, because I do get a lot of those phone calls. $36,000 basically means you have your full entitlement, but this is also your tier 1 benefits, which I will explain here shortly. If you have an outstanding VA loan, then these numbers are going to be a little bit skewed. This is just basically any loan that was charged prior. If you had like a foreclosure with a VA loan, this is where it's going to be listed on here. Then it kind of gives you all the information with the max loan amount, $144,000. Again, that's like tier 1 benefits. Things have evolved since then. Who was it issued by, the date, any conditions, right? Veteran is not exempt from the VA funding fee. Now, what happens, we've talked about this before, but I'm just going to kind of go over at a high level. If you filed your intent prior to closing on your VA loan, right? You have a filed intent for your VA disability. If you have up to a year to file, but let's say you file today and 2 weeks from now, you close on your home. And then 8 months from now, you start the VA disability process. Then it takes another year for them to make a decision. You fight it, another 2 years. So now, almost 4 years have gone down the road. If that effective date is prior to your close date, then you will reach out to the VA and ask them for a refund of your VA funding fee. And typically what they do is they send you a check in the mail, and you can do whatever you want with it. You can pay down your mortgage, go on vacation, whatever you want to do, it's up to you, but you have that option. Now, here's the number to the VA if you have questions, right? 877-827-3702. So let me show you guys an example of what it looks like with an exempt. So same thing, except primarily it's going to be the same information minus that on where the funding fee section, it's going to say exempt. Because service members with a monthly award. So on here, it's going to say how much you're receiving on a monthly basis. Now, another thing that happens is that let's say you were recently awarded the VA disability. Now, this is what lenders are using in order to, let's say, verify your disability income. Now, if you get back pay and it's very recent and it shows up in your accounts, well, with a little extra work, no big deal. It's a pretty quick process. We'll easily walk you through that. But here it's going to show you how much you're receiving on a monthly basis. But again, if you had an increase or you just got it, this may not be reflected, and then we're going to actually have to go in manually and get it updated. But again, that's a pretty simple process on the lending side to be able to do that. Now let's kind of go into some of the nitty-gritty information around this. Now, to request your certificate of eligibility, you can do one of two. You can do a couple of things. You can go to va.gov and request your own certificate of eligibility. So let me show you guys what that looks like so you know that, like, yes, this is legit. Okay, so I just went to va.gov. You guys can't see it. The cursor part's taken out. You just go to VA benefits and healthcare. And this is also, if you're logged in, it's a lot easier to be able to go through this because it takes you right to it. You go to housing assistance, and then here you can request your own certificate of eligibility. They have all about VA home loan types and what you can do, housing grants, which we've covered before. So how to request your certificate of eligibility. You're going to go into this section, and then you just literally going to click on request a certificate of eligibility, but it's going to want to then take you to logging into your system and going through it. The other options that you guys have with that as well, is if you'd like, you can always reach out to me. There's a link down below. I can pull it. It just takes literally a couple minutes. Or you can fax it in. I don't know anyone faxing things these days, but we still do get faxes from people. So if you want to do it that way, you can. It just takes a while. Now, it's a little bit different if you're on active duty. You need to get a statement of service from the adjutant, personal officer, or command, basically outlining, yes, you're on active duty, how long you've been in for. There's plenty of forms out there, and they should be used to doing them. If you guys need help on that, reach out. Happy to provide that information as well. Having a DD-214 might also help, especially if you have multiple deployments or tours. And this qualifies for all branches of service. Now, if you're in the Guard or Reserve, normally you need a discharge Form 22 or report of separation or retirement point statement. Because when they make that request, it may not automatically come back. And again, that kind of leads back to the other video we did talking about, do you meet the time and service and character of discharge in order to use your VA loan? Now, these are some additional things that may be required if that certificate comes back denied, especially for like National Guard members where they're trying to use one of the new circulars that expanded their benefits. So again, something just to keep in mind through that. And also National Guard members or reservists may need to get a statement of service. This is why it's also important to get your certificate of eligibility sooner than later, because this can be a process. We've done it, right? Sometimes it takes a month just to get a statement of service, especially if you're like in a Guard or Reserve unit where they're not actively, they have no one that's working full time. So keep that in mind. Now, when it comes to your entitlement amount itself, okay, that's the amount you can use on a VA loan. That's number one. Two, the VA guarantees 25% of a loan, and it's an important number to keep in mind when we go through this. The VA does not set mortgage rates, another big factor, because veterans think that the VA sets the rates or they deny them. No, lenders deny you. It's actually mortgage companies that are going to be doing the ones. Okay, now there's two tiers of benefits. I'm not going to harp over this a long time. I just want you to be aware of it because it is relevant. One, you have your Tier 1 benefits, which is your basic entitlement of $36,000 for loans up to $144,000. So if you bought a house for, let's say, $50,000 and you wanted to go buy another property, well, you would lock out your entire Tier 1 benefits. So any dollar amount under $144,000 when you're reusing the VA loan and keeping the current one, you're locking out all your benefits. This also applies if you had a foreclosure with a VA loan under $144,000. You would lock out $144,000 of your benefits. This is the quirky part. If you had a foreclosure, you can, with a VA loan, you didn't pay that money back to the VA, so you had an outstanding prior loan on there, you can still use your VA home loan benefits as long as you meet all the time requirements, again, eligibility and qualification. But you can't buy a house under 144,000. It has to be more than that because you've locked out your tier 1 benefits. Don't ask me. I don't make the rules. I'm just here to share with you guys what it is. Now, your tier 2 is your bonus entitlement. Now, I'll also be doing a video on the history of the VA loan because things are somewhat complicated for a reason. Now, this basically your bonus entitlement is based on Freddie Mac's single family loan limit based on the county. So in 2024, in most of the counties, it's $766,500. And then across the U.S. in high-cost areas, it's $1,149,825. Now, let me show you any dollar amount over that requires a 25% down payment for the difference. So I'm going to cover that in a second because it is somewhat confusing. But I want to show you guys where we get all this information because the loan has evolved in the last couple of years to be more competitive for veterans, but also has created a lot of confusion because there are two sets of rules that exist. But before we go into that, I'm going to give you guys an update about a circular that came out 26/19/23. I also did a whole video on this. It's called the Blue Water Navy Vietnam Veterans Act of 2019. So 2019 was a pivotal year for the veteran community. It basically removed Freddie Mac's county loan limit as long as you didn't have an outstanding VA loan. There was no limit on what you can get technically as long as you're eligible and qualified, right? Just because you could buy a $5 million place with no money down doesn't mean, you should, number one. But the other part is you have to be able to afford it. Lender needs to be able to determine that, so you're still submitting all your documentations. Okay? So again, no outstanding loan at the time of closing. So if you have a current VA loan and it's for sale and you're going to sell that property in the morning and buy in the afternoon, you can still get a pre-approval as if you didn't have a outstanding VA loan, but it's going to be contingent on you selling that property. So that's something you have to keep in mind when you're going through this process. Now, let's talk about these two sets of rules. So one is the new rule that, hey, you don't have an outstanding VA home loan, awesome, you could buy whatever. And it also depends on what areas, if you go from high cost to low cost to high cost. I'm not going to cover that in today's video because that might confuse you guys a little bit. But I'm just going to focus in on the no limit and limit. So again, no limit, no outstanding VA loan at closing, pretty straightforward. Where a limit does get in place is when you have a current VA loan that you're keeping and you want to then purchase another property and still have and use your VA home loan. So let me just give you a brief example of how to even search this information. So I'm going to go back to using the internet, but I'm not going to go to Freddie Mac's website because ironically I went to it earlier and it was just a little too confusing to use. So I'm just going to this is the one that's, sorry, I'm going to go to Fannie Mae. Lookup tool. Okay. I'll link it down in the description as well, so you guys have that. Just gonna pull up the information, and then basically you just need to type in a zip code, and then I'm gonna show you guys what some of the differences are here, so you can see where we see that information. Okay, so I typed in Arlington, Virginia is gonna be our first one. So this is gonna show you that it's a high cost area, and how I know is, oh man, this is like way smaller than I thought it would be, and it's not making it bigger. Okay, basically what it says is in the 1 unit dwelling, that's all you're looking at, no matter if it's a 2, 3, or 4 unit, does not make a difference, okay? The county loan limit's gonna be $1,149,825. So this is an example only. If you bought a house somewhere else for $149,825, the original amount, because you don't, like when you pay off your mortgage, you don't get more entitlement back. It's always the original amount locked in. This is why also you have to get your certificate of eligibility. So if you bought the original house, the entitlement locked in was $1,149,825 or $149,825. In this area, you'd still be able to buy $1 million house without a down payment as long as you're eligible and qualified. So if you bought a place for $500,000, then you would still have another $500,000 left to buy in a high cost area. But this changes based on an area. So that's high cost. That's Arlington, Virginia, right? Let's go to Chicago, Illinois, and take a look at what their county limit is. So their county limit for a single family unit is $766,550. So if you're in one area, like it went to Arlington, then you would be able to purchase for a lot more money, right? So same thing here. So $766,550, and basically I use the easy math. I subtract out. Let's say you bought a place for $266,500. Then in this area, you would have $500,000 left basically to purchase another property. Now, if you've exhausted your entire benefits of the, let's say you bought $1 million. Let's say you bought $1.5 million. I know, people are like, not everyone's buying $1 million 5 properties. Just for an example, you buy $1.5 million property, you've exhausted all your benefits. Or let's say you've bought multiple homes and you've exhausted that county limit. So anything after that amount then would require a 25% down payment because that's what the VA guarantees. Furthermore, we did this recently, which is the first time I've ever done something like this, where I had a veteran use the VA loan for the 4th time. 4 current VA home loans, because again, there's no limit. They had a property that they moved into. They had enough equity to have 25% equity in the property. So they're actually able to refinance a conventional loan into a VA loan because they had enough equity in the property, which is another way that you can use the VA home loan. So again, it's a very powerful tool to use, but it's really up to you guys to be able to go through that process. All right. So next part we're going to talk about is how do you restore your benefits and how does that piece work? So one, if you sell your house, this is like 2 parts. So I want to be careful with this. If you sell your home, you restore your full benefits. But if you have multiple homes with your benefits on there, then you're going to be you're going to be basically lifting off pieces of it and then allowing you to use more of it. Now, if you refinance out of a VA loan into a conventional loan, then technically, you have to do what's called a once-in-a-lifetime restoration. This also applies if you pay down your mortgage to 0. This is like one of those quirky things. You won't be able to use the VA loan to do a cash-out refinance on that property. Now, not an attorney. This is a personal opinion, and this is something that potentially can work, is your benefits are tied into you and the property. So if your property is transferred to a LLC or something else, providing the property is paid off, by the way, again, not an attorney, talk to the VA, talk to the attorney, but sometimes veterans will move those properties out of their name just so they can free up their benefits. They call the VA, show it to them, and then basically they're all set. And then, so the other parts, the foreclosures or short sale, which we talked about a little bit ago. If you used the VA loan, your benefits were locked out, you went into foreclosure, then that portion of your benefits gets locked out. And then you do have to reach out to the VA and see if you want to pay that money back. And that way you can get your full benefits back. But again, everyone's situation is a little bit different. Hope you guys learned a lot of good stuff from today's video. Please pass this on to other veterans and family members that are out there because they're just not getting as much information I feel as they should around this awesome program. Make sure you guys hit the like and subscribe button, and I'll catch you guys soon.